company headed next? Abhishek, hi, good morning. Good to have you on the show.
Good morning. How are you?
Very well, Abhishek. And what a strong performance. 75% of your sales growth forecasted for this year is already in the bag. So I'm just wondering, do you plan to now then update your forecast going forward?
Thank you. It's a good start to the new year, and we continue to be positive about the momentum in the housing market. I think we are at the start of a long-term structural upcycle in housing, which in turn will lead to employment creation, not just within housing construction, but also in the ancillary supply chain industries, and also lead to significant wealth creation for homeowners. So I think housing's contribution to Indian economy is about to take off. And what we've seen in terms of our results over the last 4 or 5 quarters is only the start of that medium and long-term trend. We feel quite good about how consumers are behaving on the ground. We feel good about the fact that there's a moderate amount of price rise coming in. We feel good about the fact that we are able to generate significant amounts of operational cash flow and continue reducing our debt, even while we are growing by adding new projects through JDAs. So we do feel that it's a phase of significant growth for our business, and we will be able to continue to deliver on the guidance that we've given. In terms of whether an upgrade in guidance at this stage or not, we're just 1 quarter into the fiscal year. There are obviously global and other risks out there, so we'll keep watching closely and hoping that we will keep performing in line or above our guidance.
Good to hear that. But Abhishek, you've recently entered the Bangalore market as well and also added 3 new JDA projects worth about 6,200 crore rupees across MMR, Pune, Bangalore and all these geographies. Tell me a little bit about your project plans and what are the completion timelines for the same?
So, Aisha, we are on a situation where we keep on adding projects, we keep on delivering. This year, we deliver about 12,000 units to homeowners. Now, that is the quantum of delivery that we do. So every project, typically runs on anywhere between a 30 to 48 month cycle, depending on the various factors. But really what's happening is that because our projects have started at various different points in time and we continue to add projects and complete projects, it's now really a cycle. So no one project really, needs to be focused on from a perspective of earnings performance. What we really are guiding to is that look at the pre-sales numbers, look at the operational cash flow that is generated from the business, look at the new business growth. So that's factor number 3. And then factor number 4 is look at our external ESG ratings, because housing is such a big contributor to global warming and climate change that for a housing company, being focused on ESG and focus on climate change is extremely important in our opinion. So we'll keep adding projects. Our goal is to be at a situation by the end of this year wherein our net debt is at 6,000 crores. Or thereabouts, and we'll be generating about 6,000 crores of operational cash flow this year, which means that our net debt will be at or around 1 year of operating cash flow, and that's the very prudent and conservative leverage level that we want to be at. And other than that, we'll continue focusing on growth. Over the next 12 to 18 months, the joint development route looks quite attractive. We're aiming to add about 15,000 crores of joint development projects in this fiscal year, of which we've already done 6,000 crores in the first quarter. So that looks pretty realistic. And that should support the growth of the business. We are aiming for about 11,500 crores of pre-sales this year. And we're hoping that in the medium term, we can continue to deliver 20% or higher pre-sales growth in the coming years.
Good morning. This is Nantar also joining in on the conversation. So you've got the ambitious road plan, the tailwinds, of course, from a good property market as well. But Abhishek Lodha, we're talking at a time, and you said to continue to look at the pre-sales. Give us an idea. With inflation hardening, interest rates also expected to go up, home loans will go up. How do you see demand progressing? Because at the end of the day, many of you developers will have no choice to raise prices, not just because of the way the market is moving, but because of the way the input costs have also been going up, and many of you have been holding on that.
Hi, Nantara. I think very important questions. They, of course, require detailed discussion, but I'll just give you a quick overview. The fact is that commodity prices have softened meaningfully from May onwards. And actually, inflation, we were seeing at the end of March in construction price, we've actually had degrowth in actual costs for the last quarter. So inflation on the construction cost side is clearly moderating. And as we've detailed in our investor presentation, the overall impact of inflation, even if one takes into account what happened between January and March, is quite modest. I think your question around the increase in interest rates is a very relevant one. We've looked at data since 2005, and we've seen 2 or 3 cycles of how interest rates have moved up and down. And we've seen that till interest rates remain below 9%, the impact on housing demand is quite modest. Yes, we have moved up from 6.5% to 7.5%, but we're still quite some way away from 9%. So we feel quite good about the demand scenario. As you may also be aware, we at Lodha are focused on ensuring that consumers don't have to worry about these short-term variances in interest rates. And therefore, we've come out with a program wherein anybody buying from Lodha, the interest rate is fixed at 6.99% up to June 2024. So any variations in interest rates over the next 2 years becomes irrelevant to a buyer from Lodha. And in this 2 year period, the salaries of anybody buying or income will go up. And therefore, we expect interest rates, of course, to soften in this 2 year period. But even if they were modestly high, the capacity of the person to pay becomes much higher than it is today. So while inflation as well as interest rates are both important concerns, I think there are very clear answers to them in terms of how good large developers should react to that. Broader point, Nayantara, is the fact that Indian housing market has been quite small compared to our population as well as our overall GDP size. And that's driven by the low GDP per capita. However, in the course of this decade, as the GDP per capita expands, we're at about $2,000 currently, but in the course of the decade, we'll be somewhere between $4,000 to $5,000. Housing demand is going to explode, and most of this is going to come in affordable and mid-income housing. So I think short-term impact of inflation and interest rates will work through, but the medium-term trend is quite promising.
Maybe that's why we're seeing developers also get out of their home turf, right? You've got a whole host of South Indian developers that are now entering the Mumbai market. The Mumbai-based developers are coming to North India, particularly Delhi and Gurgaon. Demand very much remains robust. But Abhishek Lodha, we understand you folks are also coming out with certain products and schemes in light of interest rates going up. You're promising an assured return, promising interest rate to buyers as well. How is that panning out? How has that scheme work with buyers, and what's going to be the impact on your P&L?
We don't have anything which is an assured return product, just to clarify. All that we have, which I mentioned earlier, is the fact that the interest rates that home buyers buying with Lodha get is a fixed interest rate of 6.99%. The impact over 2 years on our P&L, the net cost of this is a maximum of about 1.5% of the sales value. And when you look at it, so that's on an annualized basis, about 0.75% of sales value. And when you look at the fact that prices are growing at 6-7% per annum, this is not margin dilutive. On the contrary, margins we expect to grow, over the next 12 and 24 months. So I think consumers, especially in affordable and mid-income housing, which we very much believe are going to be growth drivers, consumers do care about this certainty of interest rates and not having to worry about short-term movements over the next 2 years. And it's been very well received by consumers.
Thank you so much, sir, for taking our time for us. Always good to get perspective. Okay, let's get the management at Canara Bank now. They are with us. Thank you so much for taking our time for us. Let's first start with the non-interest